Everyone. Welcome to another episode of the Great Black Speakers Podcast, where we connect through conversation. I am your host, Lawrence Watkins. I am the founder and CEO of Great Black Speakers Bureau. I'm also the president and chief operating officer of the Black Business School. And today we have a very special guest. We're here with Amelia Thomas. Amelia is the managing partner of Empire Capital Ventures and also a financial planner. So Empire Capital, they help small business owners achieve eight-figure wealth through full service accounting and wealth management services. And you can find out more about Amelia at ameliathomas.co. That's ameliathomas.co, and I'll go ahead and put that in chat as well. And today we're talking all about how Black America can build tax-free wealth. So Amelia, how are you doing today?
I'm well, Lawrence. Thank you so much for having me. How are you?
I'm doing excellent, and I appreciate you coming on today. So, for members of the audience who may not know much about you, can you talk a little bit about what you currently do and how you've gotten to this point in your career?
Absolutely. So as Lawrence mentioned, my name is Amelia Thomas. I've been in the industry for a little bit of 15 years. Started out just like many of you may have started out in the financial services industry, but I was a little bit younger. But I started off in insurance, and once I was in undergrad, I obtained my securities licenses, and I just worked my way up the ranks. So when I finally left corporate America, in 2018, I was working at boutique investment firms that specialized in clients who had NIPS in excess of $5 million. There, not only did we help build financial plans, but we managed the compliance of those plans as well. So that is a good bit about my background and my history. And now that same information that was never traveling back to Black America is the reason why I left corporate America, so I could give this information back to people that look like me, so we can continue to help people do well in our communities.
Got it. So, let's talk a little bit about, I guess, the security license that you obtained. So, tell the audience what licenses you currently have to do what you do.
Ooh, quite a few. So high level, so 766. I have a 53, I have a 24, and a 99. So that's really high level. I have a few other licenses underneath those. But, they won't allow me to do what I do now, but they will. The higher level licenses give me the ability to do everything I need to do. So the 7 is basically just your general stockbroker examination license. So if you had someone who actually wanted to sell, stocks, bonds, mutual funds, or even options, they have the ability to do so. The 66 is the advisory portion. So it's meant to charge a fee based on the advice that we provide. The 66 allows that. The 24 and the 53 basically gives me the ability to supervise IPOs, supervise other investment professionals who are selling products in the marketplace. It gives me the ability to be a market maker. So if I was actually on the trading floor, and I was actually making markets, right, to make sure there's enough liquidity in the stock market so people like you and I can go out and purchase things on these exchanges or using these online platforms, that these stocks are able for you to do so. So that is very high level, my securities licenses, and then I have a few insurance as well.
Gotcha. So you have basically the credentials to know what you're talking about. So you've been certified in all of this, and I just want to get to it. What is the number one thing that you've learned being in this career of yours in terms of financial management and financial planning?
So the number one thing that I've learned is that how you build wealth and how you get to the status of saying that you're in that 1% is absolutely all about not only who you know, but the type of advice that you receive. And that is one of the reasons why I was so passionate about leaving corporate America, because I had golden handcuffs. I was tied. I couldn't speak freely about the things that I wanted to talk about. For anyone who has any level of security licenses, you already know the compliance and the due diligence that you have to go through, and just the complexities of just being able to speak at a seminar or speak on a radio station. I mean, it's just really extreme. So I knew I needed to become one of the very few African Americans to go out and establish their own investment firm, so I can deliver the advice that I need to deliver to help our business owners really scale and grow their wealth. So as an example, the type of wealth that we deliver, or the type of information that we deliver to our clients, they would have to have at least $10 million in assets under management at a boutique wealth management firm to receive that caliber of information. And so obviously, majority of us have our wealth in our homes, tied up in equity, or in our businesses or retirement accounts. And so we don't necessarily have just $1 million for someone to manage. But that does not mean you should not have access to the advice. And that is what we provide to our communities.
What was the biggest challenge switching from corporate life to actually becoming a independent business owner yourself? So what were the hard things about making that switch for you?
I would say the most difficult aspect was actually regulatory. It's just super expensive to do what we do. And it was actually expenses that to be honest, I just prepared for the level of expenses that we incurred, just to get registered on the level that we needed to be registered at, to provide the advice that we provide. So that was in itself a shocker, just how expensive it was, right? The other challenge that we ran across is that, before I branched out, I mostly worked with a team of people. We had all the resources at our fingertips, whatever we need, Bloomberg, Barron's, whatever we needed, it was there. And when you branch out on your own, you are 100% responsible for, making sure that you have access to everything you need to handle a client's case properly. And that was something else that we just were not quite prepared for. Just the number of research articles and publications that we needed to subscribe to. And, that kind of drove up the cost as well. So hindsight, looking back, I probably would have waited maybe one more year. But, you live and you learn, and, we've learned quite a bit along the way. But I would definitely say those were our primary challenges. Just we're not completely prepared for the regulatory requirements that we were going to face. And then number two, just how prohibitively expensive it was just for the financial planning tools and wealth management tools, not to mention marketing, software and things that you need to manage the business.
Have there been any hidden benefits that you didn't know would come with entrepreneurship that you're experiencing now that you are actually an entrepreneur?
I'm sorry, Lawrence, I did not hear your question.
Oh, I must have broken up a little bit, so sorry about that. But no, I asked, have there been any hidden benefits to you being an entrepreneur that you didn't really know about when you actually quit your job that you've discovered over the last 2 years since you've been, full-time doing what you've been doing?
Yeah, absolutely. So I think the greatest hidden benefit is that I was quickly able to surround myself with other individuals who were, following the same trajectory as me. And so I now have what we like to call business besties, right? And I'm surrounded myself with a group of other entrepreneurs, and many of us are, experiencing some of the same struggles, and we're experiencing some of the same problems in business. And so now that I've affiliated with these individuals, it is just so much easier to work through the problems. And I will say that is the absolute hidden benefit, because I just never would have imagined that I would have had access to other people, who were growing and scaling, and doing great things in their businesses that I could bounce things off of. So I did not have to, learn the hard way by making mistakes. I can just learn mistakes and, move and scale a lot quicker.
Yeah, when you mentioned that, I was just thinking about just many of the networks that I'm a part of and how that actually makes business a whole lot easier, right? So instead of always having to go out and search for new contractors and other types of individuals, new suppliers, for the Black Business School or Great Black Speakers, I can just go to my networks and a networks of already vetted people, and pull someone from that particular network to kind of get things done. And then also, I guess the emotional support piece as well, in regards to having people who are going through similar things that you're
Yes.
going through, having them to share ideas with, to share frustrations with, that type of stuff as well. And now that I think about it, with the exception of you know starting a business with my brother, with my family, I really love that piece and the ability to think about what I want to think about any given day. I think the friendships and the networks that I've made has been a real big hidden benefit of entrepreneurship since I started, I guess, back in 2006, 2007. So no, I fully agree with you on that particular point as well. And for the people just tuning in, I'm here with
Absolutely.
Amelia Thomas. Amelia is the managing partner of Empire Capital Ventures, and she's also a financial planner. So what they do is help small business owners achieve eight-figure wealth through full service accounting and wealth management services. And you can find out more about her and her company at ameliathomas.co. That's ameliathomas.co. Amelia, Psalmist 4 says she enjoyed you during the Generational Wealth Summit last year. So you have some fans
Oh,
in the
thank you.
audience, yeah, at this particular moment. So please make sure
Thank you
you
so
like this
much.
video. Yeah, please make sure you like this video, share, and also subscribe to the Black Financial channel if you would like to receive more financial content like the content we're producing today here with Amelia. All right, Amelia, what's the biggest difference between high earners and everyone else in terms of their mindset?
I'm sorry, Lawrence. Could you repeat that question?
Yeah, sorry, everyone. If we're having connection issues, we apologize about that. It's actually storming pretty hard over here. But no, my question was, what's the difference in mindset between, I guess, your high earners that you see between high earners and then just everyone else in terms of how they think about money and how do they think about wealth?
So that's an excellent question. And if you don't mind, I have to break that question down a little bit further. So I would like to break it down in terms of high earners who are small business owners versus high owners who are W-2 employees versus high earner or versus everyone else. So there is an absolute mindset between those three types of individuals. So my high earners who are entrepreneurs, like they get it. They understand that growing money moves with momentum. It moves with speed. So just as though they can pivot and scale and maneuver in their business, they can also do the same things when it comes to wealth building. So when we give them recommendations, suggestions, they quickly and swiftly, activate what we're suggesting that they do or what we're advising. So we don't have a lot of going back and forth with my higher earning business owners who are looking to really grow their wealth. Now, when we go to the high earning W-2 professionals, um, those individuals, I'm not going to say they're capable because they absolutely are capable, but we do find ourselves having to do quite a bit more education. They have quite a few more questions. They're way more inquisitive. They want to know all the ins and outs, and we provide that information, but at some point it slows down your momentum. And when it slows down their momentum, they may not be able to achieve the same level of wealth as my higher earning business owners may be able to achieve. And then we have the smaller professionals who, maybe they earn $50,000, $70,000 a year. Many of them are just starting out. They're really just still trying to get a good handle on their debt, paying off student loans, purchasing their first home. So in a lot of cases, they hear the idea of I want to build wealth, but they just cannot see how that's possible because they're barely able to just manage their household budget. So their mindset is not really there. But to be honest, for all of those professionals, it will only take, 2 to 3 changes in how they invest their money to set them on the right trajectory to build that level of. It's just that most people are just not ready to. They're just not ready to receive that level of advice, and they're certainly not ready to invest in it.
Well, let's talk about those changes then a little bit. And so for everyone, I'm pausing my video, or I'm stopping my video to help with some of the bandwidth issues we may be experiencing right now. But let's talk about those changes in terms of like the shifts in mindset that needs to happen. And let's start with I guess I don't want to call it lowest income, but like the last group that you talked about. So those individuals who are still paying off their student loans, still trying to get started, still trying to get their footing in the world financially. um, what shifts do they need to make mentally to help get them to that next level?
So I think the first shift that they need to make mentally is just understanding that it's possible. I remember when I had the opportunity to speak a few years ago, and several of these individuals were in the audience. And afterwards, so many came up to me and they were just like, you hear people speak about building wealth, but we just didn't think it was possible. So I think that's the first shift, knowing that it's possible, regardless of what your circumstances may be, that is possible. So what does possible look like? It may look like, hey, we need to really dial back on eating out so much so we can invest $1,000 a month or $500 a month towards building a business. So I'll be the first to tell anyone, do you have to build businesses to build wealth? No. Is it a great way to build wealth? Yes, it is. Not going to build a business, you absolutely need to work on becoming a professional investor. So what does a professional investor look like? A professional investor looks, maybe someone who decides that they want to build a real estate portfolio, or maybe someone who wants to become very serious and engaged about some bonds, that level of professional investing. So I would say that's the first mindset people need to make, is that knowing that it is possible, regardless of what you hear on the news, what you hear on the TV, what you hear on various YouTube channels saying that you have to have $50 million or $50 to get started. You can get started just where you are, just by changing your mindset.
Got it. So let's talk about the next level then. So what happens after someone has changed their mindset and they have a successful, let's say a successful small business, for example, that's doing, I don't know, that's bringing
So
in,
you change your mind.
yeah, I was gonna say that's bringing in maybe like 150K a year after they pay everything out, that type of thing. So they have a certain level of
Okay.
freedom, but they're still
So
looking for that
once
next
you,
level. I'm sorry, go ahead. Yeah, yeah. I know we're having delay issues, but go ahead.
no problem. So if you're like after expending income, if you're netting around $150,000 a year, your next plan of action should absolutely be, if you have not already done it, is engaging a tax advisor for comprehensive tax planning. And the reason why I say that is because individuals who are able to build a lot of wealth, they're doing because they're redirecting how much money they're paying to the IRS back into their own pockets. So we need to actually change how you're investing your money, right? So having money sitting in a savings account is not going to help your cause. Having money in CDs is not going to help your cause. Having, sitting in stocks and bonds in some cases is not going to help your cause. Not if you're looking to build 10 figures in wealth. So we need to do the things that the government wants us to do. Okay. And those type things mean we're investing in real estate, where if you're an accredited investor, maybe oil and gas or conservatism. If you're not an accredited investor, like, hey, how do we, reinvest more money back into your business to grow and scale your operations there? What changes do you need to make within your entities to help reduce your taxable liability? So that tax planning piece becomes critically important, because not only will it help you determine what changes you need to make in your business, but it also helps you determine how you need to invest your money going forward. So if the goal is, I want to build tax-free wealth after a 10 or 15-year period, I have an amount of passive income coming in, where if I chose to sell my business and never work again a day in my life, I can do so. That comes with changing how you're investing your money, and that starts with making sure you're not overpaying the IRS.
Well, let's talk about those strategies a little bit different, or a little bit deeper. So you mentioned real estate as one strategy. You mentioned oil and gas, which I didn't even know that was a strategy that people deployed. Let's just go deeper in terms of uh, just step by step. Just talk about the top three industries where the government wants you to put your money, and they give you significant tax breaks to do so. Because when we talk about tax breaks, so how much of a person's general income usually goes to taxes? Let's say if they're a W-2 employee and also a small business owner. So what percentage usually goes to paying taxes?
Around 30%.
So around 30%. So, if you can save half of that, or even one third of that, you're talking about a 10 to 15% that's going back to your bottom line, that you can, reinvest or do what you feel with it, right? So the government has special industries that they just really want you to put your money in, because they think it, creates a stable society or whatever it might be, or just, some rich guy who got his law passed. Who knows, right? In terms of, why that's the case. So for you, what are the top three industries, and what are the benefits of each?
Yeah, absolutely. So number one, I'm sure all of you may be aware, but let's just speak about it just in a little bit more detail. Real estate. So I'm sure many of you have heard, like, hey, investing in real estate is going to help you save, so much money on your taxes. Well, the thing is, how that helps you is something called depreciation. Okay. So it doesn't matter if you're purchasing residential homes and a buy and hold, or if you have several multi-unit apartment complexes, or if you're purchasing something big box, like you're going to purchase um, a space where you would lease it to a Sam's or a Costco, or something along those lines. The depreciation benefits is really what helps you drive down your tax liability. So for example, we're working on a case right now. I have a client. When it's all said and done, after we complete the return, probably will the depreciation of their building will probably give them the ability to deduct an additional 160 their taxable income this year. $160,000 that they would have ordinarily been paying taxes on had they not owned this piece of estate. So just to put that into perspective, if they're in a 40% tax bracket, because of the amount of ordinary income that report on their tax return, 40%, you're saving that off $160,000. I mean, that's probably what, $52,000 in itself, of taxes that they're reducing, meaning they do not have to pay this money to the IRS. And so depreciation is huge. And what makes it even more powerful is because a lot of people believe if I write off everything, it lowers my tax. But guess what also happens? When you go and you attempt to apply for a loan at a bank, they're looking at the bottom line and they're saying, hey, you you don't have any income to show that you can repay this loan. Well, depreciation is added back, to your income for banking purposes. So when my clients get ready to go and obtain financing, because I've already told them, hey, we need to be trying to purchase another property this year. when they go to the bank is going to add back that $160,000 in income that they were able to deduct legally to show like, hey, I still have X amount of income so I can actually afford a bigger property. And we're going to just repeat the cycle over and over again. So depreciation is a gigantic benefit to building wealth and to reducing your taxes. So that is probably the first thing that I would mention. The second thing that I would like to mention, and it's something that we'll probably never see again, is the legislation regarding opportunity zones. I feel as though African Americans are not taking advantage of the opportunity zone legislation. And you have to think about it. It was created under the Trump administration, under the Tax Cuts and Jobs Act. And Trump is a real estate person. So you can only imagine that through the creation of that particular tax legislation, there had to be some benefits for real estate investors. And that's what it is. It essentially allows you to take capital gains, reinvest those capital gains into qualified opportunity zones. And there are over 6,000 census tracts across the nation and the US territories that are eligible, where if you reinvest this money, you can reinvest it into property, you can reinvest it back into businesses. And after a 10-year period of holding that particular investment, whatever that money would have grown to over that 10-year, it will be completely and utterly tax-free. So as an example, the first year, like in January after this legislation was enacted, over $6 billion in capital gains flew into qualified opportunity zone funds. And of course, less than 1% of 1% of that money came from African Americans. And the reason why that is because we don't have capital gains. Capital gains are created because you sold an investment. You sold a piece of property that you held for more than a year and a day. You had some stocks and bonds that you liquidated. You had antiques that you liquidated. Those things create capital gains. And that in itself excludes a lot of us from being able to participate in this legislation. But I'm here to tell you, you have until 2026 to get into that game. So if you don't have capital gains, I encourage you to work on creating capital gains so you can take advantage of that opportunity zone legislation. Because if someone just invested, $100,000 in capital gains into a project, and after a 10-year period, their fair market value of that project was $1 million. That's $900,000 in gains they will never have to pay taxes on. So it is truly a tool contributing wealth, again, more wealth from our communities into the hands of others. And this is our opportunity to create our own form of reparations and get into the game. So that would be the second thing that I would say. The third thing that I would say is we absolutely need to learn the differences between the types of income that we have. So we need to learn the difference between ordinary to ordinary income to portfolio income to exempt income. Because if you know the differences between those types of income, you can actually say, okay, this is what the government wants me to do. The government wants me to create more businesses. And so if you change these of how you classify your taxation, you can save money there. The government wants us to invest into oil and gas, wind, solar. There are significant tax credits that reduces your liability dollar for dollar. So not a deduction, but reduces your actual taxable liability. There are significant tax credits when you invest in those types of things, because again, the government has a vested interest in investments flowing in those directions. So you have to understand that the tax code is a series of incentives. Instead of the government having to invest all of this money on their own to develop these areas, they encourage us through these incentives to do that type of investing. But if you only have earned income, meaning, W-2 income or the income you're paying yourself as an employee of your own small business owner, you will never reach tax-free wealth because you have to start shifting from earned to ordinary to portfolio to exempt income.
It's really deep in terms of what needs to happen. So yeah, so we have real estate, we have opportunity zones, and then we also have knowing the different types of incomes in terms of how your money can be calculated by the government. And as Amelia mentioned, the government has special asset classes that were meant for the rich, that were meant to foster entrepreneurship or foster innovation or something like that. But then a lot of times those things have become, I guess, tax havens, and they become, I guess, places where just the rich keep their money because it's just taxless, that type of thing. So Amelia's spitting game over here in terms of how to save your money. And as a reminder to everyone just coming in, I'm here with Amelia Thomas. Amelia is the managing partner of Empire Capital Ventures and a financial planner. So Empire Capital Ventures helps small business owners achieve 8-figure wealth through full service accounting and wealth management services. You can find out more about her company and herself at ameliathomas.co. That's ameliathomas.co. And today we're talking about how Black America can build tax-free wealth. And she's been dropping some gems and some nuggets here today. So please make sure that you like this video. Please make sure that you share and also subscribe to the Black Financial channel if you would like to receive more financial content like what we're producing here today with Amelia. So Amelia, we have some questions in here. Let's see. I want to get to the question in terms of how can someone find a good financial planner, right? So what are the things they should look for? So I don't know how that works. Can you work in every single state, or how does that work, and what should people actually look for?
Yeah, absolutely. So yeah, we can absolutely operate, and I would say operate in probably 48 of the 50 states right now. So there are no requirements, or there isn't anything that we couldn't quickly work through regulatory wise if we needed to operate in one of the states that we couldn't. With that being said, here are some things that I would recommend that you look for as it relates to a financial planner. Number one, I think you need to understand where you're trying to go, because just like all CPAs aren't created equal, all financial planners aren't created equal either. So if your goal is, long-term wealth and fiscal sustainability, you want to build your community, you need a financial planner who can help you achieve those goals. So if you're working with a financial planner or financial advisor who works primarily with W-2 employees, they work primarily with people who are, just out of college, or maybe young adults, in their 30s and 40s with young kids, that may not be the best person for you to work with. I think you need to have a good understanding, number one, of where you want to go, and you need to align yourself with a wealth manager, financial planner, financial advisor who can help you get there. That's number one. Number two, I think you also need to understand how this person is compensated. And it's not to say that if they're compensated on commission only, that they're not the best choice. I'm not saying that at all. But I do think you need to understand how this person earns their income. So for example, we're fee-based only. We do not sell any products that's based on commission. So we literally are paid based on the advice that we give or the services that we provide. And so that fits a little bit better for, the service that we offer. So I think you need to understand, number one, or number two, how the person you're interested in working with is compensated. Number three, I also think something else that you should look for is what do they specialize in terms of investing. Some people, all they invest in is certain types of mutual funds or types of asset classes. You may have someone who will only invest in companies that are blue chip companies, right? They've been around 50 70 years. So I think you need to have a good understanding of what is their investment palette, like what are the options of how they choose to invest or help diversify their clients' assets. And to add to that, diversification, in my opinion, is beyond how is my portfolio divided. And I think as a people, we have to get beyond that level of diversification where they're only talking about, hey, my money is in this 401k, how is it diversified? Your entire portfolio, which would include anything outside of your portfolio, like your business, if you have real estate, if you have other money sitting in a bank checking or savings account, all of those things should be taken into consideration when we're speaking of diversification. So be sure that your advisor or your planner or wealth manager, has a number of options where you get your money and not just simply what's available in the stock market. So I would say those are probably three really good things to start with, Lawrence.
Yeah. And this seems like a lot of people are very interested in what you're talking about here today as well, because we have over 100 people watching right now. And yeah, they're loving it. So please give the thumbs up button. We won't be able to get to all the questions, but if you want us to do some type of master lecture, so let's call it a 2 or 3 hour master lecture with Amelia sometime in the near future, leave a comment. Let us know because we already have quite a few planned for the rest of this year. And most of those actually came from audience demand. So you all said in one of these interviews that you wanted to see it, and we actually are making it happen. So be on the lookout for that for the rest of 2020. We actually have one tonight coming up in terms of what is it? Or how to be a tech founder. Excuse me. Or how to start a tech company as a non-technical founder. So that's what we called it. So it's for all individuals who want to learn how to build an app, but you don't know how to code. So how does that actually happen? How do you find developers? How do you find a good product idea? All of those different types of things. So that's tonight at 8 p.m. Eastern. I'll try to find the link actually. So pages, here we go. And I'll put the link in chat as well for you all to actually see if you want to join that. So we already have over 300 people registered for that tonight. And we hope to see you there as well. But if you want us to do something like that with Amelia, let us know and just leave a comment, and we'll do our best to actually make that happen as well. This is another good. This is the last good question before I, wrap up, or before we wrap up today. Amelia, what books can my young adult children read to lay a foundation for financial literacy?
That's such a good question. You know what? If we're just speaking of, financial literacy, I would tell you that even though I don't agree with everything he promotes, I would tell you any of Dave Ramsey's, financial peace university type books. I think all of those would suffice for just good basic level financial literacy. If you want to talk about financial literacy in the terms of helping your kids develop a wealthy mindset to start building wealth, so not just simply maintain, but you want them to survive and thrive, I would actually encourage them, if they haven't already. And I know we have, as a community, have canceled him. I know we have canceled them, but I would actually encourage them to start with Rich Dad Poor Dad, believe it or not, because they're going to speak very intuitively about this thing called that cash flow quadrant. And I promise you, if your kids can understand the importance of that cash flow quadrant and the different roles each quadrant has in a person's journey through life, they can absolutely become very successful and thrive and build wealth.
All right, so that was Rich Dad Poor Dad, and also Financial Peace University with really Dave Ramsey products. So Dave Ramsey products is the first thing that Amelia mentioned, and then also Rich Dad Poor Dad. So thank you for that question. So Amelia, for people who want to follow you, see what you're up to, actually use your services as a client, how can they get in touch with you?
Absolutely. So you can find me on Facebook, Amelia Thomas. We also have a group called the Unconventional Wealth Hackers on Facebook. You can also reach us via email at amelia@ameliathomas.co. We're also on LinkedIn. Will be the primary methods, but I'm fairly easy to find. So if you were to Google me, you go to the website, you can always figure out very easily how to connect and how to reach out with us. But we hope you do connect, because we believe that this is information that's just not, higher level, wealth management, how to build tax-free wealth. We know this information is not really circulating in our communities. And so we really want to help get this word out. It is possible. Everything Amazon is doing, you can do too. Everything Robert Kiyosaki does, and how he doesn't pay tax, you can do those too. It's just about how do we get this information to people, to more people that look like us.
Wonderful. So before we get out of here, Amelia, we've been doing something new. I've been doing rapid fire questions. So I ask you 5 rapid fire questions to end the interview, and you just answer to what's the first thing that comes to your mind. So the first question is, what is your favorite business book of all time?
My favorite business book of all time? Actually, believe it or not, here most recently, it has become Rocket Fuel. I don't know if I'm supposed to expound on that, but it has become Rocket Fuel.
Okay, so Rocket Fuel by Gino Wickman. Is who wrote Rocket Fuel, I believe?
Yeah, I think so.
All right, so so Rocket Fuel by Gino Wickman. He talks about the visionary and the integrators. So check out that book, and it's a great book. So number 2, are there any CEOs or companies that you're following right now that you're trying to emulate as you build your own business?
So I follow Elon Musk. So I follow him. I follow Jeff Bezos. I follow Melody Hobson. I follow. I do follow. What is the CEO of LinkedIn? I can't think of his name right now, but I follow
Jeffrey
him as
Winter.
well. Thank you. I follow him as well. So those probably, higher level, like Fortune 100 type companies, that I follow. Lower level, I would say I would have to give it to Lamar with Traffic Sales and Profit, and everything that he's building there. And you guys, I love everything you guys are doing with Black Business School.
Well, thank you. I appreciate that. So shout out to Lamar as always. So my third question is, who is your favorite historical figure from Black history?
My favorite historical figure from Black history would probably have to be Fred Shuttlesworth. So I am a product of Alabama State University, and Alabama State is located in Montgomery, Alabama. It is in the heart of the it's also known as the birthplace of the Civil Rights Movement. So we have a number of historical figures who've done great things to help us move throughout the country, or throughout these past 50, 60 years, to reach equality in America. And I mean, we're still working on that. But the tenacity and the work that he did within SNCC and other organizations, the work that he did alongside Martin Luther King and John Lewis at the time, who we just recently lost, and so many other figures, has just always made him one of my favorite figures. And we have several buildings and other monuments throughout Montgomery, that highlight, his life and what mark he left on Montgomery.
All right. So Fred Shuttlesworth, I've never heard that answer before, so I'm gonna have to do a little bit of research on him. The next question is, how many hours of sleep do you get at night?
I think you asked me how many hours of sleep do I get at night. Is that correct?
Yes.
I would say somewhere between 6 to 8.
Oh, good for you. Yeah. I do too, but yeah, good for you. That's awesome. My last question is, if you can go back in time, what advice would you give your 20-year-old self?
Oh my goodness. If I can go back in time, the advice that I would give my 20-year-old self would probably be to focus on entrepreneurship then versus later in life. I absolutely would have put more emphasis on entrepreneurship and not to say that I don't value education, as I do, but I probably would have put less emphasis on master degrees and all of these other, higher education programs, and more emphasis on entrepreneurship.
Wonderful. Amelia, thank you so much for your time. So today we've been here with Amelia Thomas. Amelia is the managing partner of Empire Capital Ventures, and she's also a financial planner. And Empire Capital Ventures helps small business owners achieve eight-figure wealth through full-service accounting and wealth management services. You can find out more about Amelia and her company at ameliathomas.co. That's .co, not .com, but .co. So that's ameliathomas.co. And today we've been talking about how Black America can build tax-free wealth. So please, before you get out of here, make sure that you like this video, share, and subscribe to the Black Financial channel. Also, like I said before, if you want us to do a special master lecture with Amelia, please let us know. Please put a comment and just let us know that's something you want to see. We actually have one coming up in November on estate planning. So I would see this actually fitting in well right either before or after we have the one on estate planning, and maybe make the month of November personal finance month for us or something like that. So just let us know. That's just an idea that I had, but if that's something you're interested in, just post a comment. Also, we have a special master lecture tonight. I'll put the link in here again. And we're talking about how to start a tech company as a non-technical founder with Amanda Spann, who is going to be actually teaching that. So yeah, there we go. So Amelia, thanks so much for your time. And then on behalf of Amelia Thomas, my name is Lawrence Watkins. You all take care, be blessed, and have a wonderful day. All right, bye-bye.